Hey everyone, and welcome to The Explainer. Today, we are jumping right into something completely fascinating, the Great Wealth Infrastructure Grab. And we're going to anchor this whole concept by focusing specifically on Goodbody's recent Belfast play. So let's get right into it. Now, on the surface, this topic might just look like your standard run-of-the-mill regional business deal. But if we look a little closer, it actually reveals a massive, kind of hidden global shift in wealth management. It's really this wild story of dynastic capital, strategic positioning, and honestly, the race to control the future of money itself. So I want to start by posing this question directly to you. Where does billionaire capital actually go? When we think about ultra-high net worth individuals deploying their capital, we usually picture investments into, say, booming tech startups, sprawling commercial real estate, or maybe even flashy public company acquisitions. But what if the most strategic investment right now isn't in what the money buys, but in the actual channels the money flows through? I want you to treat this explainer like a financial detective story, because we're going to track these global capital flows right down to their hidden destinations. Okay, let's dive into this by looking at Goodbody. They're a major wealth management firm that is aggressively expanding right now, and they have a staggering target in their sights. They actually expect their assets under management to approach the massive 20 billion euro mark as they finish up their current wave of acquisitions. 20 billion euros. I mean, that number isn't just a fun little milestone, it represents immense financial gravity. It shows this highly deliberate, heavily capitalized push to capture and manage a huge chunk of private wealth. And really, it sets the stage for the whole shebang we're about to uncover. To really grasp the macro, we've got to start with the micro. The specific catalyst for all this massive growth is a strategic expansion led by Goodbody's chief executive, Martin Torme. Under his leadership, the firm is just rapidly expanding its private wealth footprint across the entire island of Ireland. And their goal here is super specific. They are building out an integrated private wealth platform designed exclusively to serve ultra-high net worth individuals. Basically, they're laying down the tracks to become the absolute primary destination for serious capital in the region. Let's break down the specifics of their latest strategic move. Goodbody has agreed to acquire a firm called Legacy Wealth Management. Now, this target is located up in Belfast, which is a major milestone because it marks Goodbody's very first acquisition in Northern Ireland. But the really important thing to notice here is the target market. They aren't going after everyday retail investors. No, they're extending their reach directly into a highly lucrative private wealth market, serving business owners, really successful entrepreneurs, and family-controlled enterprises. And they are bringing some absolutely serious firepower to this expansion. This whole push is backed by a severe 50 million euro capital commitment from their parent company, AIB, which, remember, acquired Goodbody back in 2021. Now, this 50 million, it isn't for keeping the lights on or day-to-day operations. It's a dedicated war chest for strategic growth. It proves, without a doubt, that major financial institutions are entirely willing to heavily fund the acquisition of wealth management channels. It's a highly aggressive, heavily armed push straight into the ultra-wealthy market. Let's move to and see how this builds from just a single deal in Belfast into a fundamental paradigm shift in how the whole financial world operates. We're zooming out from Goodbody's specific acquisition to introduce a core concept that analyst Alexander Voss has highlighted, and it's the idea of wealth infrastructure. We aren't just looking at a company buying another company to grab its clients anymore. We are looking at the construction of a permanent, highly sophisticated apparatus designed specifically to house the world's most substantial private fortunes. And this brilliantly illustrates the contrast. It's honestly striking. In traditional corporate mergers and acquisitions, capital is typically deployed into a single operating business. Like buying a manufacturing plant to pump out more goods or snapping up a tech firm to acquire their proprietary software. But investing in wealth infrastructure, that is entirely different. This transaction represents an investment into controlling the very channels through which substantial private wealth is managed and preserved. To put it simply, you aren't buying the factory anymore. You're buying the river that the money flows through. So let's clearly define this crucial concept. Wealth infrastructure refers to the physical and strategic platforms specifically designed to channel, preserve, and compound billionaire and multi-generational capital at scale. What this means in plain English is that wealth management itself has become a major destination for strategic capital deployment. The apparatus that actually manages the money has become just as valuable as the assets it holds. It's all about building a fortress, a literal financial fortress that can protect dynastic capital across generations and across borders. Which brings us to the driving force behind this entire shift. It's what we're calling the family office arms race. The demands of ultra-high net worth individuals and family-controlled enterprises are evolving so rapidly right now, and those evolving demands are sparking just intense competition within the industry. Wealth managers are no longer just competing on, who has the friendliest advisors or the nicest office. They are flat out racing to build larger, way more comprehensive platforms that are actually capable of servicing the incredibly complex needs of billionaire families. Well, what exactly are those complex needs? Modern billionaires require a highly specific, top-tier suite of capabilities. They absolutely need cross-border advisory to navigate totally tangled international tax and regulatory environments. They need sophisticated estate planning and succession services just to ensure their wealth transfers smoothly down to the next generation. And they demand institutional-level investment expertise, which gives them broader access to private markets. To provide all of this under one roof, wealth managers simply must build larger, seamlessly integrated platforms. There's really no other way around it. Now, what's really interesting about this is how the very battleground for clients has fundamentally shifted. Back in the day, the old competition was heavily focused on portfolio performance alone. It was essentially a contest of who could get the highest percentage return on a stock portfolio. But today, the new competition is entirely about scale, geographic coverage, and comprehensive family office capabilities. Delivering integrated investment management alongside international succession planning has become an incredibly valuable strategic asset. Getting good returns, that's just baseline table stakes now. The real value for sure is in the infrastructure. And this perfectly explains the broader macroeconomic trend we are seeing globally. Major financial institutions are aggressively pivoting. They're investing heavily in businesses that serve ultra-high net worth clients, rather than competing solely for everyday retail banking revenues. Retail banking is highly competitive, and honestly, the margins are often pretty thin. But the billionaire room? That is where firms can build enduring value by serving as the central, indispensable hub for families seeking to preserve and compound their power and capital at massive scale. So the crucial point here is captured perfectly by analyst Alexander Voss. He notes that we are seeing continued consolidation within the private wealth industry as firms race to build scale before the next wave of intergenerational wealth transfers reshapes global capital ownership. That right there is the ticking clock behind all of this. The largest transfer of wealth in human history is impending right now as older billionaires pass their fortunes to the next generation. Goodbody's Belfast play? It's really just one piece of a frantic global race to be the firm catching that capital when it finally falls. Which leaves us with this final massive question. Who will control the infrastructure of the next generation's wealth? As we've seen with Goodbody and AIB, the players who are aggressively buying up the wealth management channels today are the exact ones positioning themselves to hold the keys to tomorrow's global capital. The invisible machinery of wealth is literally being rebuilt right in front of us. It is a high-stakes race, and the winners will quite literally shape the future of global power dynamics. Thank you so much for joining me for this explainer. I really hope this helps you see the hidden shifts happening right now in the financial world. Catch you next time.